The Iraqi Dinar's Financial Revolution, an in-depth analysis of recent developments. The dawn of a new era for the Iraqi dinar. The Iraqi dinar has long been a topic of speculation and financial interest. As Iraq continues to undergo economic transformations, recent developments in its exchange rate have captured the attention of investors, policymakers, and global financial institutions. The official publication of a revised exchange rate in the Iraqi Dinar Gazette signals a potential shift in the nation's financial strategy. This article delves into the factors driving this change, its implications for various stakeholders, and what the future holds for the Iraqi dinar. The historical context of the Iraqi dinar. To fully grasp the significance of the recent exchange rate adjustment, it is essential to examine the dinar's historical trajectory. Prior to the 2003 invasion, the dinar held a significantly higher value. However, years of conflict, sanctions, and political instability led to a steep decline. The Central Bank of Iraq, CBI, has since taken steps to stabilize the currency, but challenges such as inflation, corruption, and an over-reliance on oil revenues have complicated these efforts. Despite these hurdles, Iraq has made strides toward economic recovery. The latest exchange rate adjustment may indicate that these efforts are yielding tangible results, potentially ushering in a new era of financial stability. The key drivers of the exchange rate adjustment. 1. Strengthened oil revenue and foreign reserves. Iraq, as one of the world's top oil producers, has benefited from increased oil prices, boosting its foreign reserves. This financial cushion allows the CBI to implement more aggressive monetary policies, including exchange rate adjustments that could stabilize the economy. 2. Economic reforms and international monetary policy alignment. The International Monetary Fund, IMF, has encouraged Iraq to adopt economic reforms that improve financial stability. Measures such as modernizing the banking sector, promoting digital transactions, and enhancing foreign exchange transparency align with IMF recommendations and support the recent exchange rate changes. 3. Political stabilization and increased investor confidence. With Iraq making strides in political stability, investor confidence has risen. A stronger, more stable dinar could attract further foreign investment, reinforcing the nation's economic recovery. 4. Inflation control and improved domestic purchasing power. A key goal behind adjusting the exchange rate is inflation control. A more valuable dinar can make imported goods more affordable, improving the cost of living for Iraqi citizens. Effects on Forex markets and global trade. 1. Market reactions and currency speculation. Forex markets react swiftly to exchange rate fluctuations, and the new dinar valuation has triggered heightened speculation. Investors and currency traders are closely monitoring how this shift plays out in the global financial landscape. 2. Impacts on imports and exports. A stronger dinar reduces import costs, benefiting businesses and consumers. However, rapid appreciation could impact Iraq's export competitiveness, requiring careful economic management. 3. Implications for international trade agreements. Iraq's trade relationships with key partners, including the US, China, and the European Union, could shift due to exchange rate changes. A stronger dinar may foster more favorable investment conditions, but could also affect trade negotiations. Implications for Iraqi citizens. A higher valued dinar enhances purchasing power, making essentials such as food, medicine, and consumer goods more affordable. Additionally, it encourages more citizens to engage with formal banking institutions, strengthening the financial system. However, the long-term stability of the new rate remains a key concern for many Iraqis. Investor insights. Is the Iraqi dinar a smart investment? The dinar's potential for revaluation has long intrigued investors. While the recent exchange rate shift is promising, experts caution against speculative investments without thorough research. Currency investments carry inherent risks, and investors should consider economic trends before making decisions. Future projections, possible scenarios. Scenario 1. Gradual appreciation and economic growth. If Iraq continues its economic reforms and maintains stability, the dinar could see a gradual, sustainable appreciation. Scenario 2. Short-term fluctuations and market corrections. Market volatility could prompt the CBI to intervene, leading to temporary fluctuations before achieving a stable equilibrium. Scenario 3. Managed float system adoption. Iraq may transition to a managed float system, allowing the dinar's value to adjust based on market demand while remaining under CBI control. This model has been effective in other emerging economies. Conclusion: a defining moment for Iraq's economy. The latest exchange rate adjustment marks a significant milestone for Iraq. While its long-term impact remains uncertain, it reflects Iraq's progress toward financial stability. Whether this leads to a full revaluation or incremental adjustments, one thing is clear: change is happening. Investors, policymakers, and Iraqi citizens alike must remain informed and adaptable. As Iraq moves forward, responsible governance and continued reforms will be key to sustaining this financial transformation. Stay updated with the latest insights on the Iraqi dinar by following IQD to VND for expert analysis on global currency markets.